Okay, everyone, I think we'll kick things off. Thank you very much for attending this webinar on what the future of tax audit insurance looks like. So we're just going to talk a little bit about the ATO plan, what the current market has been offering in the last 15 to 20 years, what our structure is, but also the structure of the future of what tax audit insurance will be like moving forward, we believe, and the benefits of what that means for you, for accounting practices, bookkeepers, etc., and how you charge that, and how you can actually optimize the opportunities for that. That's just a little bit about us, about our product and what it is as well, which is underwritten by Pacific International, which is a large international underwriting insurance company. Been going for over 20 years. We're going to talk a little bit first about the ATO plan. Now, this is something I'm sure by being professionals in your industry know quite a lot about, and that is that the ATO absolutely, you can see it. They're dramatically increasing random audits, reviews, investigations. There are a majority of them are reviews, not audits. They turn into an audit after a review, and we're getting quite a lot of claims through from reviews. Notifications are coming in now just via email saying, hey, we're going to be doing reviews on these number of clients. Boom, 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 and we just require proof of your receipts and proof of expenses, etc., etc. Now, understand that we had COVID, we had a lot of things going on. There's a lot of money, over $7 billion was given out, and the ATO have just announced recently that they've invested millions of dollars into the review department of the ATO, obviously to ensure that a lot of that money is coming back into the government, which is understandable, but that is exactly what's going on. And so if you don't think your clients are ever going to get reviewed, think again. It's not a question of if, it's a question of when your clients were reviewed, and a question of how many will be reviewed, because they're coming in like, as I said, I even have one example, a client of ours, an accounting practice, recently, they specialize in a specific industry. They had notification from the ATO of 200 reviews in one hit on their client base. So that's obviously probably an extreme, but it happened. And we're regularly getting multiple reviews from accounting practices of 5 to 10 on a regular basis. So again, don't have your head in the sand thinking that it's never going to happen to your clients. Absolutely, it will. It's just a question of when. I just want to go over the current market. Well, the market of how tax audit insurance has been offered in the past hasn't really changed over the last 15 to 20 years. The first one is obviously through an insurance broker or an individual policy that the client may have taken out themselves directly with the insurance company, or your client may have an extension on a policy like a management liability policy or a BizPack, and the third one is obviously through maybe through their accounting practice that offer another option where letters go out, they get charged X amount of money for that offering, and only a small percentage take it up. So from that aspect, the challenges have always been from the third offering through accounting practices, is there's always been time-consuming annual administration involved in that process, every year having to provide information on the clients, how much you want to charge, and et cetera, et cetera. Also, private client information is being asked to be provided to those third parties, which I'm sure it's all fine, but but obviously you have to get permission from the client to provide that private client information under the Privacy Act, which can be worrying if you haven't, et cetera, et cetera. Then that information is provided to that insurance company, and that audit insurance provider then sends out the letter with the amount to the client, but under the name of the accounting practice, which can be obviously perceived that the accounting practice is selling insurance, which a lot of practices that I speak to don't like that perception. The other challenge and final challenge is that clients are paying huge tax audit insurance fees through this process, but yet they don't actually own the policy. It's under the practice's name, which is also a red flag, because if the client leaves, they no longer have protection, but they've paid the same, if not more, than a standalone policy, but don't own anything for it. So that's also have been one of the challenges that commonly come up in our research of what we did to see what was going on. Other challenges: there's never been protection for self-managed super fund trustees. As you all know, trustees, the ATO and the government hold the trustees 100% responsible for their fund, in making sure that their compliance is right, and they're following the rules and regulations of how to operate their fund. Other challenge: billing costs of the client is calculated on a fixed base premium. They haven't really had much flexibility in what they charge. And in the cases that we have heard of, there may not be a retroactive date. So unless you've had insurance in place previous years, and if the ATO decide to go back those years, you may not be covered for the work that undertaken for that audit for those years. So another also disadvantage. And the final one is a small percentage of clients normally only take up this sort of insurance. And I'm not saying that they don't want it, but for the price that they're asked to pay, they're not seeing the value for that money, which means that only a small percentage of clients do actually take it up. Now, this is our structure. Now, this is from all the research that we've done for years. It took us over 3 years to create this, and it's based on this. And when we researched it, it wasn't just, oh, let's have a look at the challenge. We spoke to the associations, we spoke to accounting practices, we spoke to the ATO. We worked with all the organisations, saying, what are the challenges? How would you like to see tax audit offered, in the future, so that it can be really advantageous for everyone to be able to have it. Because the feedback that we all got was everyone thinks that everyone should have it. Anyone that's paying tax should have protection, but yet it hasn't been affordable for that to happen. So what we've created is what's called a group policy. Now, this is a one policy per practice, like yourselves, where it protects 100% of your clients and all associated entities automatically under the policy. Now, how we do that and how that's affordable is because we can get everyone, when we did all the actuaries in understanding the pricing, etc., we were able to reduce individual pricing or premiums down by 85 to 90% less. So as an example, the average cost of a standalone policy for a small to medium business is around $400 to $600. Our average price per client group, which includes all associated entities, is between $40 and $60. So because we are getting everyone, because it includes everyone, we're able to bring the price right down where people see strong value in it, but it's also very, very, very easy for practices to simply incorporate that as part of their annual client fees. So you get a great saving there. Now, what this means is your fees as an accountant in connected to doing the tax work, audit work, review, investigation, are all protected no matter who is targeted, which is great. So that means no chasing invoices or fees from those clients who previously may not have had the protection. So we also have a game changer in the fact with the self-managed super fund space, where this policy is the first and only policy of its kind in Australia that offers protection for trustees of self-managed super funds, which I'll go through very, very shortly. New clients of the practice are automatically covered. So under the group policy, if during the year, if you generate new clients into your practice, they're automatically covered under your policy. There is no need for any notification to us, and there's no money changing hands. At the end of the year, at the renewal time, we just simply come back to you and say, hey, is there any update on your clients, on client numbers? And you say, yeah, actually, we now have another 50, and off we go for the renewal. So for us, for the group, again, based on eliminating all the challenges and how we perceive the future of tax audit insurance to look like, there is absolutely zero administration. So every year, all we need initially is to understand the categories of your client group numbers. So you just put them in there, like a salary and wage earner, sole traders, self-managed super fund, businesses up to $1 million turnover, 3, 6, 10, etc. And it's just your client group numbers. So not individual tax return numbers, but you may have only 500 client groups, but also you may do 3,000 tax returns because you do all the associated entities. So we don't need to know any information about your client, any information about the associated entities to make it really, really simple. We just need the client group numbers in each category, and that's it. Once they're in place the first year, that's all that's need to be provided. We don't send out letters. There's no selling tax audit insurance to clients because you use it as a value add as part of your service offering, and off you go, and that's done. So the billing cost to the client now, because it's the practice's policy at a very low rate, it gives you full flexibility over how you charge and what you charge. You're no longer stuck with, oh, well, that's how much it costs, so I have to charge, whatever it is. No, because it's so small, it gives you that flexibility of what you want to charge. There's only one simple annual renewal, and that's it. So we just, as I mentioned, we just come to you each year and say, is there any update? Yes or no, make the adjustment, and off we go for the next 12 months. We have a very simple claims process, which is online. So you just click on the claims link when you receive your policy, or you go through our website and you simply lodge the notification to start the claim. And then after the work is completed, you just simply lodge the invoice or your work document of what you would charge, outlining your hours of what's been spent, etc., etc. Very, very simple to lodge. Takes about 20 seconds. Very simple. When we're talking about implementation, it's literally is just a set and forget. So like I mentioned, once it's in place, and it's just, each year understanding if there's any differentials for the following year. We do not knee jerk on premium increases due to claims. We base it around the market, on what the market is doing. It's not like car insurance where you're an at fault because you're a poor driver. As I said, a lot of these with reviews, which is 85% of notifications from the ATO are reviews, they're not audits. That may have nothing to do with anything to do with you, with the practice, the accountant whatsoever, or even with the client for that matter. So your premium is based on the overall market. So so there's no knee jerking on that. We've been going for 18 months. Just so that you're aware, to give you a little bit of history on us, we've been going for 18 months. We're going through our renewal periods right now. There has been no increases so far with any renewal. So the pricing is good. It's where it's supposed to be, and it's working well. So just to give you a little bit of background on an overview on the product itself, with our AuditSave product group policy, we basically provide lots and lots of different taxes. I've just given you a snapshot there, and you can read for yourself that it's all there. The big ones right now, your super guarantee contributions, your payroll tax, even land taxes come up recently. So you've got a few things there. We cover all that no problem. Pay employer obligations, etc. But heaps more than that I've listed. That's just a snapshot. But as you can read there, it's not just an audit, investigation, or review by the ATO, but it can also be from a related government authority like state government, etc. Claims made policy. We also have an unlimited retroactive date, which means obviously you take on the policy this year, the ATO do a review or audit or investigation, they pick something up and now they want to go back years. They're absolutely covered for those years. So they can go back 10 years. That's no problem. They're covered up to the benefit limit that we provide. Very, very simple. So no previous insurance necessary. We have a zero excess. So anything that you do as a claim, no problem. And we provide a $15,000 benefit limit for the group or entity as a starting point. You're more than welcome to get higher limits, but the limit is across the board for all clients. Now, I can tell you, as you know, maybe the statistics, 96% of businesses in Australia have a turnover of less than $3 million. $15,000 limit is more than enough for the majority. I think the average review cost is around $3,000 to $4,000, and many conversations I've had with practices is that it's a very unique thing if there is an audit or investigation or review that goes above the $15,000. But you can get it. You can if you need an extra 15,000. What I say is with the group policy, you can always offer your clients, if they want a higher limit, we can actually facilitate that as well. We can provide a standalone policy for the client and we can do it as a top up. So what that means is if you have a client that says, oh, look, I would like a $50,000 limit, that's no worries. But under your group policy, they already have 15. So now they just need a standalone policy for 35 as a top up facility. And therefore they're actually saving money rather than getting a standalone policy for $50,000. So they could be saving $800 plus, on that exercise. This is a little bit about the trustee protection. As you know, in 2016, legislation changed of how trustees were going to be penalised for breaching the rules and regulations of how they operate their fund. This is a game changer for the self-managed super fund industry. We have self-managed super fund administration businesses, auditing businesses, etc., taking up the group policy, protecting all their clients because of this cover. So we provide a $5,000 benefit that actually goes towards any administrative penalty if the trustee has been found to be in breach. Now, there is, not too sure if you're familiar, but under the SIS Act, which is the rules and regulations, there is a section in there called section 166, which has been nicknamed speeding fines for trustees. There are 17 breaches. The $5,000 covers 13 out of the 17 breaches in full. So it's a great benefit and it's automatically part of the policy. So I'm just going to go over a couple of examples now for you of people who have had a previous arrangement in place and versus our policy. So this first one is sort of like a medium-sized practice, and they've had, as I said, a previous arrangement. So as we can see in red, that was what their previous arrangement is. So the total amount that their clients, and they have 725 client groups, 256, which represented 35%, took up the policy. Now, this is the highest percentage I have actually seen in Australia of a take up. But again, still 256, 35% took it up. And it came to a total of $142,000 that the clients paid out. And the average cost was $555. When we provided them with a group policy quote for all 725, 100%, it came to $36,781, saving of $105,000, which equated to 74% of overall policy savings. It was 91% savings of the individual costs, so 50 versus 555, with 100% of clients protected versus 35% of clients protected. So it speaks for itself. This is our second example, which is a smaller practice. So we give you two sort of different examples here. This client has 602 client groups, which and that only 87 took up their previous arrangement, represented only 14%, left 86% exposed. The total cost that the clients paid out was just under $30,000. When we provided the same exercise, our premium was only $18,000, a saving of $11,500, which was a 40% policy saving, 91% individual savings again, 30 versus 338, and 100% protected versus 14%. So it's, again, speaks for itself. I don't have to really get into too much because it's black and white. Now, this is an example of the second example of how the costs were implemented into their practice. So this is how the majority of accounting practices do treat the policy, and that is like all other business expenses, like PI insurance, your rent, electricity, you name it. It's all the same. It's a business expense, and you calculate it into your annual client fees. So remember that the policy itself not only protects your client group, but your client group represents all associated entities. So, for example, this practice, they said they complete over 2,000 tax returns. They had 602 client groups, and their earnings from those 602 client groups and the 2,000 tax returns was around $900,000. So the $18,000 premium represented only 2% of the overall turnover. To obviously get their money back or to pay for it was to simply increase their client fees by only 2% across the board on all tax work, which made it very, very, very affordable. And just use the example here, like if you just did an iReturn, they will charge you $200 for the iReturn. Instead of $200, it would now be $204, but they get full tax audit protection cover for a $15,000 limit. Extremely affordable. However, the practice uses this as a great example to get their client fees where they actually wanted to, because the challenges that another challenge that I do hear on a regular basis by practices is the ability or the wantingness to be able to put up their client fees with all other expenses increasing in value. They need to go, okay, my rent's gone up, wages go up, how do I increase our client fees? We need to increase it, but we don't want to upset our clients. Well, this is a great way, because now, because of our pricing is so low, of only, in this example, only 2%, the majority are somewhere between 1 to 2%. I just announced, organized cover this morning. The premium money represented 0.8% of 1%. So 0.8% of their turnover. So it can be quite low, but great opportunity to increase fees where you want it, because you're providing now another value add to your existing servicing. So they're actually seeing that you're also looking after their interest and adding additional services, which can easily be forgiven when the client fees are increased. So very easy to implement. Now, with this way, as an example, they increased their fees by only 7%, which is the inflation rate, which actually earned them $45,000 profit using this product, versus they only earned $8,760 with their previous arrangement, with all the admin, all the letters, all the other work attached to it, and only having 14% take it up. So I think it even cost them more than that, but with the additional work that they needed to do simply by keeping that arrangement going. So no brainer, they loved it. it's fantastic for the practice, and everyone won. Clients got protected, the accountants' fees were protected, and it was a great value add for the practice to do it. So here's just some of the benefits now for the practices that take it up. Obviously, we've touched on that your fees, the accounting's fees for conducting the audit review, are protected irrespective of who gets targeted. There's no chasing invoices. There's no potential risk for fee disputes because the client doesn't have to interact with the accountant saying, oh, why should I have to pay that? It's not fair. I didn't do anything wrong, etc., etc. It obviously helps further protect the client relationship with the practice, and if the client, if the client does leave the practice because it's a group policy, they no longer have the tax audit cover. It's not like the other arrangement where they've paid this huge fee for it. It literally is a value add by being a valued client of the practice. So it's a completely different scenario, and it helps retain the client. There's only, as I mentioned, one simple group policy, providing total peace of mind for both your clients and the practice, knowing the costs are covered. And of course, you can fund the premium over 12 months. And we encourage that sort of strategy whilst you're collecting your annual client fees throughout the whole 12 months. So you can always be cash flow positive. So where you get your premium, you go, oh, now we've got to find that money. No, you don't. We can organise ways for you to fund that over 12 months whilst you're collecting your client fees. So it's very, very, very easy to do. Just some marketing benefits for the practice. There's no more selling tax audit insurance. There's no more selling insurance. It's just part of your offering of how you incorporate it, and you use it, as I said, like a value add and a point of difference as your practice. And because of that, you can also use it to increase your profits and use it to get your client fees where you need them to be at, for you to earn the profit that you need to earn. But also, because of the value add and also the points of difference, we have quite a number of accounting practices now use this to go and attract new business clients into the practice, because now they could be saving a lot of other clients hundreds and hundreds of dollars in tax audit fees if they're paying the high tax audit fees, where they will automatically have protection by coming into an accounting practice with the AuditSave group policy. So they could be going, great, I'm going to go to that accountant because I don't have to pay those fees and I'm still protected, and it's still around the same cost for doing just the tax work. So they're absolutely marketing strategies going out left, right and centre to attract those new business clients. So overall, we believe that the way that this is going, as I said, having a group policy that protects 100% of your clients at all times at a very, very low rate, incorporating it like every other insurance that you would have in your as part of your practice. It's the future of how tax audit insurance will be like. And as I said, the majority of the associations and the people that I speak to believe it should be compulsory, like PI insurance for practices, to actually have something like this in place to protect everyone and everyone involved in that in tax audit. Okay, so and that is the end result, and believe it is a no-brainer. And if you need to contact us, this is what you do to contact us. If you would like a quote, or if you'd like to have a separate discussion about it, more than welcome. Please take our contact details. You can get it on our website, and that's auditsave.com.au, and that's my email address, Brenden with an E, brendenT@auditsave.com.au, and my mobile number 0493 469 525. More than welcome to please contact us.